Hey y'all, what's up? It's AM Trades, and today we are going to be doing a trade recap for the 19th of April 2024. So today we took one trade and we took one win. It was a TP1 winner, and it was against the kind of overall distribution for the day. So today was kind of an interesting. Today was an interesting kind of setup and execution, but we kept the risk proper. We didn't over leverage, we didn't over trade, no revenge trading, nothing like that. And so, yeah, I'd say pretty good day and pretty good week overall. I did recover a funded account from 5% drawdown to break even this week. So a 5% gain on the week. And actually, I will have a full trade recap plus insights and what that kind of did to my mental and my psychology throughout the week going through that. So yeah, if we get into today's trade, we're going to do a full breakdown. If we have a look here, it was not GBP JPY. I don't know what I'm doing there, but okay. So if you have a look, this is the trade right here. I'm just going to take away all our drawings really quick and go over kind of what's been going on these last couple of days in the market. So if we look here, we can see ever since we made this all-time high here at 18,500, we kind of had a shift in order flow, and it's been completely bearish for the last couple of days. This is also because of fundamentals. So obviously the conflict going on right now in the Middle East, as well as just global tensions are really high right now. And so when that includes the US in the way that it is at the moment, it's going to push the stock market down, and especially the technology sector, which is the NASDAQ 100, is going to be pushed down more heavily. So in the last bull run in the last year, what we've seen is that the technology stocks have done incredibly well. And what that has meant for the NASDAQ is that when there's an SMT between the NASDAQ and the S&P, so the S&P 500 is a mix of technology, kind of pharmaceuticals, all kinds of sectors of the US stock market, and it's 500 companies. However, the NASDAQ is 100 companies, and it is only tech companies. And so what's going to happen is when tech companies are more bullish and more kind of powerful and more volatile, then usually an SMT, if the tech sector is doing well, will form where NASDAQ will not take the low as it is stronger, and the S&P will take the low, and that's where the SMT will happen. However, in the last couple weeks, when global tensions have been high and continue to be high, what happens is it will flip. So the S&P 500 with a more diversified base, when tech stocks are doing badly and the tech sector is doing badly, what's going to happen is the S&P is going to be stronger, so the S&P is going to not take the low, and the NASDAQ will take the low, and that's how the S&T will form. So that's kind of how we saw this bearish shift in order flow. This is on the hourly chart. So we made that all-time high, and then we just kind of started respecting, bearish for value gaps on this move down here. And then we had this area of an order block, or demand, supply and demand traders will call it. And this resistance, if we take into consideration support and resistance retail concepts as well. And this inversion for value gap here got completely disrespected by this move down. So anyways, we have seen a fundamental shift in order flow to the downside. And it's the same thing here for the S&P 500, but you can tell that the S&P 500 is a little bit stronger at the moment compared to the NASDAQ. So if we look down at the NASDAQ, if we grab our price forecast here, from the all-time high a couple weeks ago all the way down to, we are down about 8% to the low, okay? And if we compare that to the S&P, we can see that we are down only 6%. So this is what I'm talking about. When tech stocks are doing bad, especially right now due to the conflict in the Middle East, the NASDAQ will underperform the S&P 500 and will retrace harder due to its higher concentration in said kind of area, in said division, like part of the stock market. So anyways, moving on to today, we can see that these last couple days we had big moves down, consolidation day, move down, consolidation, this is Asian session, and then again move down, and this is Asian session today, consolidation, move down. So we had these big moves to the downside, same thing on the S&P. If we hide this, and then if we just look today, okay, so today at 8 a.m. here, I was actually looking for longs, and let me tell you why I was looking for longs. So here on the hourly, if we go and see our drawings here, you can see this low right here, okay? The low of Wednesday, January 31st, okay, all the way back in January. If we look here, it was taken this morning on the NASDAQ. So I'm pretty sure this is a weekly low. Yeah, this is a weekly low. So we swept a weekly low today, which means that I was wanting to see a move to the upside, of course, okay? But we did not sweep it here on the S&P 500. Where's the Wednesday? It would have been here. It would have been this weekly low. We did not sweep it. So what ended up, this low. So what ended up happening is I was looking for buys, okay? And if we go down onto the hourly, you can see it a little more clearly. Here, this low here, and this low here. Sorry, that's the daily. This low right here. So I was looking for buys going into this morning. And so what I did is right around market open, we're already down on the 5 minute. I have my my bias. I want to be bullish, but however, these draws, these relative equal lows on the 5 minute, I really wanted to see them get swept before we saw any move to the upside, especially since if we take the fib of this entire range, so from this low to this high, you can see that the 0.618, the golden pocket, is right around these relative equal lows here. So right around this area is where I wanted to see us retrace into, and then it'll probably sweep this if it comes down to here, okay? Because when we sweep the first set of relative equal lows of low resistance liquidity, we are going to see price take every single set of that low resistance liquidity before we see a trend shift, okay? So here, if we sweep these lows, price will always come down to this area and sweep it before we see a move back to the upside, okay? So that's what I was looking for. So 5 minutes here, we see our manipulation upwards. This is our 10 a.m. manipulation. I initially wanted shorts for the day, actually, because I saw this kind of trend and order flow, but I didn't have as high conviction of shorts as I did for longs, so that's why I ended up taking longs. So I kind of sat here for about an hour, I think, with nothing going on in the chart. And then, so we just saw these slowly move down. And then we go on the 1 minute. What I saw was here, okay? We can see that right at market open, we see the manipulation upwards, and then we see our distribution towards the downside. We sweep these lows, okay? These lows were swept right here, as you can see, okay? And so here, and there's also a fair value gap here that we mitigated and respected. So if we see here, what happened is we saw that move to the upside. We saw this bullish fair value gap get created on the 1 minute. This is where I'm looking to execute. Sweep of liquidity, high time frame SMT, fair value gap. This is like an okay setup because it's not within kind of my time frame, but it's still something that we're willing to take because more often than not, this is my edge in the markets. This is where I am going to make money, and this is where I have and will continue to make money in the markets. So here we can see that we had this move down. I had my limit set here. I wanted to buy at this start of this fair value gap. I got my entry right around here when price retraced into my fair value gap. So we kind of chopped around for 1-2 minutes, and then we saw this big expansive move down. At this point, I am in the trade. I have conviction. I am not closing early. Okay, it either hits my stop loss or hits my take profit. I am not getting emotional about it. It's not going to affect me in any way, a win or a loss. It's the same thing. So when I'm this deep in drawdown, the only thing I can tell you guys to do is please do not go to your execution platform and see the floating P&L be in the negatives. Okay, because at this point, I'm what? Minus $900 in loss, unrealized. If I go and I look at my 8-cap DX, okay, if I go and look at my execution platform and I see that the account is down $900 in red, big, bold red numbers, what is that going to do to my head? That's going to make me want to close, right? That's going to make me think, start doubting my edge in the market, start doubting my conviction, and that is going to hurt my confidence no matter what. So when I am in a trade, I'm purely thinking about the charts. The money is nowhere near my head. Okay, and that's what I think is so important. So we saw this expansive move down, come and tapped into this bearish order block, and we did respect the order block 100%. That's kind of why I have my stop loss here. If we weren't going to respect the order block, we were going to continue to the downside. This is where my trade would be invalidated, and that's where you have to put your stop losses to the point where you think your trade is going to get invalidated. Okay, so Anyways, here we have our entry, and then we kind of retraced a little bit, kind of chopping around, and then we started seeing our move up. So what I saw here is we had this tiny little fair value gap here on the 1 minute, and we saw bearish fair value gap, of course, and we saw it getting respected by this candle here, and so I was just waiting for a inverse of it to have a little more conviction. So we saw the inverse of the fair value gap, and then this is also a bearish order block, which we wanted to see invalidated, and it did get invalidated with this big expensive move up, creating another fair value gap. And this is where we saw it hit our take profit. So this whole time I was watching, okay, did we get a break of structure here, another break of structure, and then we had an external break of structure, even though this one was kind of weak. So this is kind of where this is my take profit 1 level. So this is where I took 50% of my position off. And every single time I hit TP1, I set my stops to break even. I urge you to do this. Please understand that as soon as you hit take profit 1 and you take money out of the markets, you do not want to have price go back and hit your stop loss for a loss. After I hit my first take profit level and I'm out of the markets to an extent, I am always setting my stops to break even so that I am green on that trade, not necessarily for the day, but on that trade, okay? And then that will continue whatever into TP2, TP3, whatever. So I was looking to target all the way up into this hourly fair value gap here, as well as all of these pent up low resistance liquidity. We never ended up seeing that get hit. We continue to see a move to the downside, but this is why kind of taking partials and managing your risk correctly is so important. Because if you look, I was completely trading counter trend. Okay, I was taking longs in a fundamentally and technically bearish market, which is kind of crazy it's a crazy thing to do as a trader or anyone in the markets, right? However, it is my risk management that allowed me to still pull money out of the markets and pull profit and execute my edge over the market. Okay, so that was the trade for today. If we see, we still saw a massive move down. Okay, and that's kind of where market closed. It's a Friday, so there was no news today either. If we look here, and so what we want to see following this. Oh yeah, so I'll show you my my trading journal. This was the trade for today, so a total of $891. If we go to my dashboard for today, you can see $891. It says 2 trades because I took a partial, so it'll split it in half. And then if we look here, because one of them was break even, it cut my win in half, so $891. And that's the total drawdown of the account, and this is for now. So you can see that it's an 100K funded account. I have $99,962, and I was all the way down at $95,000, 5% drawdown, and I recovered it. Yeah, so a video will definitely be coming on that this week. And then we also have this evaluation account on Funded X, this $200,000 account that I'm going to start trading next week as soon as this one gets kind of stabilized. But yeah, that is the trade for today. I hope you guys found some insight. I urge you guys really to check out the Instagram and TikTok. We have daily uploads, more updates about kind of what I do day to day and kind of what's going on with that. And yeah, going into the next week, I hope I can keep executing properly, keep pulling money out of the markets, keep my risk tolerance the same, keep following my trading plan, and let's hope this World War III doesn't start, man. Yeah, I'll see you guys in the next one. I should have that up by tomorrow, all of that trade recap for every single trade this week, plus the psychological effects and how I managed to pull that account at a 5% drawdown. So stay tuned for that. That's gonna be a good one. A lot of value in that one. But yeah, see you guys tomorrow. Appreciate it.